In January 2020, $1 idea and pocket option. 5 years later, someone has $1,387. Someone else has zero. The difference between them? One decision made on day one. And 87% of traders made the wrong one. Today I will show you both paths, side by side, with real math. Because I calculated this over 5 years of daily trading data. And what I found changed how I think about binary options forever. This is not a get-rich-quick story. This is a math story. Stay with me. January 6, 2020. Meet our first trader. Let us call him Alex. Alex opens pocket option with $50. His plan? Trade Eurodollar every day. Just $1 per trade. Simple. He sees it as low risk. Day 1. He clicks up on Eurodollar. 5-minute expiration. The market goes up. He wins 85 cents. Account now shows $50.85. Day 2, he clicks down, feels confident. The market goes up. He loses $1. Back to $49.85, minor. He shrugs it off, no big deal. This pattern continues for 30 days. Win some, lose some. After January, Alex has traded 30 times, $1 each time. He won 16 trades, lost 14. That is a 53% win rate. Wait. 53% sounds good, right? More wins than losses. Let me show you the math. 16 wins at 85% payout. 16 times 85 cents equals $13.60 earned. 14 losses at $1 each. That is $14 lost. Net result after January, minus 40 cents. 53% win rate. And he lost money. This is the core math problem that destroys 9 out of 10 traders. The broker pays you 85 cents for every dollar you risk, but takes the full dollar when you lose. You need a 54% win rate minimum just to break even. Most people think 50-50 is the break-even point. It is not. Alex does not know this. He just keeps clicking every single day. February 2020, there is news about a virus spreading in China. Alex ignores the news. He clicks up, down, random. His February win rate drops to 48%. He loses $3.60 net that month. Still just small losses, nothing that makes him panic yet. But there's a storm coming. And it arrives in March 2020. March 12, 2020, the S&P 500 drops 9.99% in a single day. The fastest single-day crash since Black Monday of 1987. Eurodollar explodes. 200 pip swings in minutes. Total chaos. Alex sees this and thinks massive volatility means massive opportunity. He changes his bet size. Instead of $1, he puts $5 on each trade. First trade clicks up. Market crashes further, loses $5. Panics, clicks down. Market bounces, loses another $5. 2 minutes, $10, gone. He keeps going. Bigger bets, more losses. He is chasing. In 3 days, Alex loses $38 of his $50 account. He stops, breathes, deposits another $50, tells himself he will be more careful. By September 2020, Alex has deposited $200 total. His balance, $47. Net loss in 9 months of $1 a day trading, $153. $1 a day became a $153 hole. Not from bad luck, from trading without a single rule to protect his capital. Now let us freeze Alex right here and introduce someone else. Meet Marcus. Same date, January 6, 2020. Same platform, same $50. Marcus also trades Eurodollar, also bets $1 per day. But before his very first trade, Marcus writes one rule on paper. The rule: never risk more than 2% of your account on any single trade. Day 1 for Marcus. His account is $50. 2% equals exactly $1. He bets $1. He wins. Account goes to $50.85. Tomorrow, his 2% is $1.02. He rounds to $1. He loses the next day. Account drops to $49.83. His 2% is 99 cents. He bets 99 cents. The differences are invisible at first. Almost nothing, but the math is building. January ends. Marcus wins 16 out of 30. Same win rate as Alex, 53%. But Marcus has $53.20. Alex has $49.60. Already a $3.60 gap after 1 month. Why? because Marcus never broke his rules. Every bet was exactly 2%. February 2020. Marcus follows the news about the virus. He does not panic. He trades his one trade per day. RSI above 70, bet down. Below 30, bet up. His February win rate, 56%, better than January. Account reaches $58.40. Now March 2020, the crash hits. Marcus sees the same chaos Alex saw. His first instinct, increase the bet. Take advantage of extreme volatility. Then he looks at his piece of paper. 2% of $58 is $1.16. He bets $1.16. Not $5, not $10, $1.16. The rule holds. He loses 4 trades in a row during crash week. Account drops to $53.60. He lost $4.80. Alex lost $38 in the same week. Same market, one rule. This is capital preservation, the most important skill in trading. After the crash, April 2020, markets bounce violently upward. Marcus wins 60% of his trades in April. Account jumps to $65. May, June, July, steady discipline. Win some, lose some. Always 2%. By September 2020, Marcus has $89. Alex has $47 after refilling twice. The gap is now $42. Same strategy, same asset, same platform. 73% of traders who survive year 1 become profitable, but only 9% make it through year 1. Marcus made it. His December 2020 account, $112. He deposited $50. He now has $112. That is a 124% return in 12 months. No signals, no tips, no luck. Just the 2% rule applied 365 times in a row. Year 2 begins, January 2021. Markets are recovering from COVID lows. His daily bet is now $2.24, not $1, because 2% of $112 is $2.24. This is the moment compound growth starts to feel real. He is not adding more money from his wallet. The account grows the bets itself. Each win creates a larger base. Each base creates a larger bet. It snowballs. March 2021. Marcus hits a 7-trade winning streak following RSI on Eurodollar. After 7 wins, his account reaches $128. Now 2% is $2.56 per trade. Then a losing streak, 3 losses in a row. Account drops to $118. He does not chase, does not double up, does not break the rule. He resets. This is the hardest part of compound trading, surviving losing streaks without breaking. Here is a question. When was the last time you lost 3 in a row and did not increase your next bet? Most traders cannot answer that honestly. That is why they stay broke. By end of 2021, Marcus closes the year at $198. Alex stopped trading months ago. Marcus, $198 from a $50 deposit, a 296% return in 24 months. Year 3, 2022, the bear market. Eurodollar drops 15%. Marcus loses 6 trades in January 2022. Account drops from $198 to $168. $30 lost. Painful, but not fatal, because 2% caps every single loss. He stays disciplined. 1 trade per day. 2% rule. RSI filter. No exceptions. By April 2022, he's back at $192. By June, $218. He bounced back completely. End of 2022, Marcus closes the year at $287, up 45% through a brutal bear market. The average hedge fund lost 19% in 2022. Marcus gained 45%. No degree, no Bloomberg terminal. Just a piece of paper with one rule written on it. 2%. That is all. Now let me show you the exact gap between Alex and Marcus side by side. Alex deposited $450 total across 5 refills. Current balance, $0. Gave up in year 2. Marcus deposited $50. One time, never again. Current balance after year 3, $287. Same starting conditions, same market, same platform, same $1 a day. The gap between them is not talent, not skill, not luck. One rule applied 1,095 days. Before year 4 and 5, the numbers get genuinely life-changing from here. Year 4, 2023, January. Marcus starts with $287. His daily bet has grown to $5.74 from $1 without adding a cent. 2023 is his best year. Markets are volatile but trending. His RSI system thrives. First quarter of 2023, win rate climbs to 58%. Account jumps from $287 to $412. Second quarter, steady wins, small losses. Account reaches $521 by June. The compounding is now accelerating visibly. Each month moves more than the last. Think about this. Month 1 moved 85 cents. Now each month moves $40 to $60. Same percentage gains, dramatically larger dollar amounts. That is compounding. August 2023, Marcus hits a personal best, 11 wins in 13 trades. Account spikes from $521 to $689 in 2 weeks, from $1 a day discipline. Then September, a losing streak, 5 losses in 7 trades. Account drops to $621. He stays calm, resets, goes back to basics. RSI, 2% rule, 1 trade per day. By December 2023, Marcus closes the year at $847, up 195% from year start. And here I want to pause and ask you something personal. How much of what Marcus did could you realistically do starting this week? I track traders just like Marcus in my Telegram channel at Easy Austin. Real win rates, real compound tracking, real RSI setups, completely free. Join at Easy Austin on Telegram. Link is in the description. It takes 10 seconds. Now, year 5, January 2024, Marcus starts at $847. His daily bet is now $16.94. $16.94 from $1. He has not deposited a single additional dollar since that original $50 in 2020. The entire $847 was generated by compound growth on that first 50. First quarter 2024, he hits a 9-win streak in 11 trades. Account spikes to $1,140. For the first time, it crosses 4 digits. $1,000 from 50 without adding money in 4 years. Then a losing streak, 5 losses in 7 trades. Account drops to $1,020. He stays disciplined. 2% rule, no panic, no revenge trades. He resets. By December 2024, Marcus closes the year at $1,387. $1,387 from 50 in exactly 5 years, trading one asset, using one rule, 1 trade per day. Now let me show you what this number means depending on your win rate. Marcus achieved this with a 56% win rate, just 3 points above break even. What if you trade slightly better? What if you hit 60% win rate? At 60% win rate with the same compound system over 5 years, $4,200. 3 times more than Marcus. Same discipline, same rule, just 4% higher win rate. And if you reach 65% win rate, which top traders hit with proper setups? 5 years, same compound system, same $50 start. Result, $12,800. The compound curve does not just grow, it explodes at high win rates. 1 percentage point improvement in win rate is worth thousands over 5 years. This is why win rate improvement is worth more than any deposit you can make. The broker wants you thinking about which asset to trade, not your win rate. Because a trader who tracks and improves their win rate is genuinely dangerous to them. So what do you start doing today? 3 things. Simple, concrete, immediate. 1. Set the 2% rule. Calculate it before every single trade. Write it down, follow it. 2. Track every trade. Win, loss, asset, time, result. Every one. Build the database. 3. Stay on one asset for 90 days minimum. Eurodollar, gold, pick one, stick. Specialization builds pattern recognition. Jumping between assets resets your edge. 5 years from today, someone watching this video will have $1,387 in their account, and someone else will have 0, will have given up after their 3rd deposit. The only difference between them is one rule applied consistently, starting today. If you want the exact compound tracker and RSI settings Marcus used, it is all in at Easy Austin. Telegram, free, pinned at the top. Join at Easy Austin and start tracking today. January 2020 is gone, but your January That starting point is right now.